I would now like to introduce today's panelists. Sandy Canna, Global Head of Shared Services at Anglo American. Sandy has worked as an advisor, provider, practitioner, and industry expert and has proven executive and management experience gained on an international scale, having lived in several countries around the world. Deborah Cox, Executive Advisor at Principal Sourcing Change, serves as an advisor on the research and strategic content of Everest Group's Global Business Services Program. Her focus is on coaching leaders and supporting them through repeatable tools, including predictive models and playbooks. Soumya Srinivasan, Head of Technology, Innovation and Strategic Partnerships at Novartis. Soumya has over 20 years of experience in life sciences, working at the intersection of business and technology. His primary focus has been to help clients address and transform their key technology/data needs and envision/build extensible solutions to address the unmet business needs and support new science. Nitish Mittal, partner in the technology practice leading the firm's coverage of digital transformation and IT services in Europe and the United Kingdom and Ireland. He covers technology areas across automation intelligence, automation, cloud, interactive services, and the Internet of Things. David Rickard, Vice President, Everest Group, advises senior executives of global services on their strategic mandates and initiatives. David's responsibilities include leading Everest Group's sourcing and vendor management and customer experience management services offerings for EMEA clients, as well as select global accounts. And with that, I'd like to turn over to Nitish.
Perfect. Thanks, Peter. First of all, everyone, thanks for joining today. I hope everyone's looking forward to the end of the year and some time off during the holidays. And we thought we'll reflect on one of the biggest questions of our times right now in terms of what can we do about the uncertainty in the market, but also continue to transform. This is what we'll do today. Unlike some of the other webinars and virtual events that you might have perhaps attended in the last 2 odd years, we will hopefully not go through a lot of slides. We'll set some context in terms of what we are seeing in the market, but what we really want to focus on today is really the breadth and the depth of the experience that the panel brings to this market. So we'll focus a bulk of the discussion on the panel discussion itself and going through a few topics that David and I will pose and send the way of our co-panelists. We'll then summarize some of this in terms of what did we really think and what are the common themes that emerged, and we'll also take some audience Q&A. If you haven't already, please feel free to use the Q&A tab to submit questions. We have a ton of questions that have been submitted before the session itself. So we'll try and take a good mix of pre-submitted as well as live Q&A. If we move on, we thought we could start with a quick poll. As we reflect on the year and the events of the year, and this year seems like a decade, more than others, coming so quickly on the heels of a global pandemic a few years ago. How do you think about and how are you feeling about a digital transformation spend in 2023? Now, the term digital itself has been much abused in my opinion, but I'd be curious to hear how you think about this. The poll will remain open for another 30, 40 seconds. I see responses coming in furiously. And David, I'm curious to see, what our attendees think, because it's certainly coming at an interesting time in the economy right now.
Yeah, you're right. And I think, Nitish, it's interesting that, as you said, what does digital actually mean in a couple of the areas I look at? It is quite confusing in terms of what do we mean by digital, and is it some more of the maybe sort of transactional services that are going to be digitalized, or are we looking at true digital transformation? So be interesting if we could get into that conversation, which we won't today from the poll, but what do I mean by it? But it's looking like most people are going to see some sort of increase in their digital transformation spend, which is interesting and probably expected as people are looking to look for ways to optimize the business and reduce cost.
Absolutely. And, I see that a majority of the attendees today have given their or have chimed in. And if you really look at the top 2 responses, right, most of them, about 70% of all the attendees believe that they're going to increase their spend. About 40% feel it's going to be in single digits or up to 10%, but a healthy share, nearly a third, feel it's going to be over 10%. Given that the fact that technology spend doesn't increase to that tune every year, and in the macroeconomic backdrop, I think that's a fairly healthy sign. And one of the big questions today is technology and digital spend recession proof? We'll find out more as we move along.
Yeah.
So thanks,
and just
everybody.
the last thing on that, Nitish, was 6% saying it's actually only 6%, and 2 people who responded are saying it's going to decrease of any size. So interesting, maybe particularly what verticals are in, or if they're in particularly challenged industries. But yeah, always insightful, these polls.
Absolutely. So if we move on, we'll talk about a few things very quickly. First, let's talk about the market context. I promise you one thing that we won't do today is just talk about the doom and gloom. I think all of us, I'm sure, are following what's happening, ever since the start of the year, accelerated by the unfortunate war in Ukraine and events thereon. So we'll talk a little bit about what we're seeing as it impacts global technology and services. Then we'll focus on how can enterprises think through accelerating around and through this uncertainty, which will set us up nicely for the panel discussion. So if you move on quickly, we have a few quick messages. We won't drain these slides. From a macroeconomic perspective, as I said, a lot of the large economies, and this looks at G7 right now in GDP performance, are facing a significant blip in 2023. Now, anybody who's in the UK&I, like I am, or others, in Europe, will not be surprised. Obviously, UK and the European markets have been more proximate to some of the events and the ensuing energy crisis, food crisis, and so on. So we expect that some of these economies, and most economists expect some of these economies to take a bigger dent than others. We do expect a rebound, but I think it's going to be a turbulent 12 to 18 months. On the other hand, if you look at the services side of the equation, which is the supply side of global technology, business process, and engineering, those providers are still doing fairly well. So if you look at the services industry growth on the left, which is organic constant currency growth for the top 20 publicly listed IT service providers, they're till H2, going into H2 this year and H1, they've been doing fairly well. In fact, growing at higher levels than what was seen pre-pandemic. And then if you look at book to bill on the right, again, there's been a minor blip in the last quarter, but again, on an absolute terms, those book to bill numbers or pipeline numbers are healthier than where they were going into the pandemic. So from a services perspective, in the neighborhood of the world we live in, the macroeconomic situation doesn't seem to be impacting as much. Having said that, we're seeing a few different dimensions as we move on around talent. Now, if you just look at talent, and whether you look at the US for context or the UK on the right, we are starting to see early signs of workforce correction in big technology companies. So if you look at job openings or the number of unemployed people, you're starting to see a very tight labor market. And some of it has been accelerated by various levers in the last few years, which we'll touch upon in the panel discussion. But what we're starting to see is there are early signs of correction in terms of big technology companies. If you follow all the layoffs and the optimization efforts that some of these companies have undertaken in the last 2 or 3 months, we suspect that's a leading indicator of what we can expect. Having said that, I think we still see technology spend to be fairly recession proof, but they will be more focused on optimization. And the last aspect of talent, I think, and that's been, I think, one of the main questions, symptoms of what we've seen in the last few years is attrition. So if you look at LTM or last 12 months attrition for some of the large technology business process service providers, it has spiked significantly in the last few years. The good news is I think we're starting to, see the peak of this. We're nearing the peak. I don't think it has peaked yet. Some providers have fared worse than others, but overall, a lot of them witnessed a significant increase in their attrition, adding to the labor crisis and the talent crisis in the market. So that's really where the market is. What we're going to do now is focus a little bit and focus on how enterprises are responding. So David, as you think about this, how do you think clients are responding and what do you think we can expect?
Yeah, thanks, Nitish. And if we move on to the next slide. So at Everest Group, we always try to provide some sort of practical experience and some advice. And it's just 4 things here. We've got lots of content that we could share, but 4 things that we're seeing a lot of our clients that we're talking to, the approaches that they're taking, really. The first one would be around not accepting those blanket price increases. So when their providers are coming to them and asking for a rate increase, really being a lot more analytical about it and really understanding, okay, well, that's not necessarily going to be for every skill set I need. So what skill sets are going to be high demand? Which skill sets should really warrant that price increase, but other maybe low skill set or roles that are actually sort of very readily available pushing back on those and not accepting blanket price increases, one of the trends that we're seeing across the industry. The second one is around evaluating and evolving their contracting models. So really thinking about, okay, what are the important roles that we need to accelerate to do change efforts, so digital transformation or change efforts, but what are the run functions? And should we be thinking of contracting differently for run functions than we are for change efforts? And should there be a price differential for those type of roles as well? So again, being a lot more analytical about how you're paying and how you're contracting for those roles. Third would be around avoiding long-term contracts and not getting locked in now. We do think we're probably near the peak in terms of the price increases and the talent issues that we're finding. So I think that it would be about not accepting long-term contracts and thinking about not getting yourself tied in for the long term. And then lastly, around diversifying the supplier base. And so thinking about, have you got the right suppliers? Have we got enough competitive tension? Have you got a champion challenger model if you required? But also, have you got the right providers who maybe have unique or niche skill sets? And versus going to one provider who's a bit more of a jack of all trades, do you need to be thinking about diversifying, not only from a cost perspective, but also potentially from a risk and a talent availability perspective? So thinking about these types of strategies. So they're just 4 examples that we're seeing in the market. But what we wanted to do for the rest of this time is really to hear from the panel. I mean, we know that these type of sessions, people really value the practitioner view. So we really want to get into the questions. So Nitish, back to you.
Perfect. And I'm happy to announce that we can now take the slides down and just focus on the conversation. And let's start this discussion. And we have a range of experiences on the panel today. But Deborah, I'm going to start with you, and let's start with the topic of sourcing. Now, as we think about sourcing for these services and technologies and business areas, how do you think organizations will evolve the fact that they need to build and augment their capability, right? Because they need to keep accelerating. But how do you also think that's going to impact the future of the GBS model or global business services model?
Well, I've been thinking about this a lot. And if you think about it, evolution of the model has been constrained by this thing called a contract. David, you know very well about contracts. The challenge is that contracts for services, look, GBS, any business services organization and enterprise needs augmentation or change or new technologies at any given time. But the challenge is the contract and the needs of the organization are not in sync. A 5-year contract basically looks at a binary growth in the status quo. That, to me, is the challenge. The contracts are not shiftable. I mean, look at providers. What do providers do? They take contracts from the bank. Yet we have enterprises whose needs change constantly. So there's a conundrum here. And I'm not sure I know how to fix it. Maybe Soumya and Sandy too, but I don't see, the need's not going to change. The need for support, the need for partnership is not going to change. The contract gets in the way of evolving that need.
Deborah, can I add to that?
Sure.
So I was just, again, sort of having worked on both sides of the fence as a provider as well as a buyer, I guess, of services, and actually, frankly, just as a practitioner, I suppose I keep kind of, and I'm slightly biased, I know, but GBS is sort of here to stay. There is a future here in my view, but it needs to evolve. It's the natural home, I think we all think, when there's tough times, right? Because we're naturally cost conscious. And so when times are tough, when you've got cost pressures, inflation pressures, recessionary pressures, it's almost like the safe harbor where, because GBS creates agility and flexibility, and it forces the enterprise to embrace a different operating model, i.e. to leverage GBS. Just thinking around that, linking the sourcing to the future of GBS, I think very much there is a very strong future for GBS and contracting models associated with GBS. That's my view. I mean, I think there's some evidence around the post-pandemic world, around we've proven ourselves to be resilient and sustainable. And I think your point around contracts often stifle innovation, and stifle agility, I think that's something to take away from a sourcing lens as to how to create a more flexible environment for contracting. But I think, you know, the recession has forced us to challenge operating models. The pandemic forced us to do that, by the way. And I think many organizations are now going to be right-sizing their enterprise portfolios. So I think, again, they'll be looking to contract in a different way to augment or build their capability. And then I think that the reality is, I think the next 2 or 3 years are going to be really quite turbulent. I'm not being a doom merchant. I think they are going to be turbulent. You know, some of the metrics are yet to prove themselves, but I do feel remarkably optimistic around what we as enterprise providers and enterprise practitioners can expect to see. I think we've got a very, very exciting 2 or 3 years ahead of us.
Exciting, I think is right, but the challenge right now is that next year is not going to be exciting unless you like to live in the edge. And next year is.
Oh, we all live on the edge. We love the edge.
Yeah, but the next year is really going to be about conserving corporate assets, and that includes cash. I'm a little bit surprised at those numbers, automation numbers. That may be true on the technology side in the front office, but I don't think it's going to be true in the back office. You know, the monies to invest in back office automation, digitization are not going to be there.
And I agree, those survey results surprised me as well. That poll that you did, Nitesh, David, I have to say the organizations I'm involved in are battening down the hatches in discretionary spend. So, you know, I think we've got to take a real long, hard look at what's going to happen, as Deborah says.
Yeah, the budgets haven't come out yet. The budgets haven't come out yet. That's why.
No, true.
And Sandy, I guess it depends on whether these digital transformation areas are classed as discretionary or actually they become a business imperative and therefore
of course
don't fall within the discretionary. So I just wanted to pick up on a quick thing, and then I've got a question I'd like to loop Somya into as well. But just in terms of the contracting piece, I totally agree. But one of the things we talk to a lot of procurement people about these days is how you start to think about building innovation into contracts. I think procurement and sourcing people are getting there and realizing that actually we need to be enabling innovation and sort of development of contracts. So there's definitely an appetite for doing that from sourcing and procurement people. And I think that's where we'll be getting to, but it is going to take a while because a lot of the time you're measured based on, well, how's the cost dropping down year on year? And if you build innovation in, it means that you can't compare what you did in the past. So I totally think we're going to get there. Just thinking about this in terms of a partnership, and something I'd be interested in your view, but how are organizations approaching their tech investments and who they partner with? So one of the things that we've seen is that there's been a focus on, as I said in my little piece earlier, that there's a focus on bringing in specialists when needs be. So strengthening partnerships with your core strategic suppliers, and a lot of focus around supplier relationship management, but then thinking about, well, I may need some specialists in particular areas. What's your view at what are organizations that you see or working with approaching their investments and their partnering?
Sure. David, I think before I comment on that, maybe a quick observation on when you said bundling innovation into contracts. I don't think that's actually new, right? That's been happening for a while, but the problem is precisely that, right? When you bundle innovation into contract, you then start thinking about measurements and you start thinking about optimization on innovation, right? There's a difference between service delivery and innovation. And when you bundle everything into one contract, that differentiation is lost. And I have not seen, having sat on both sides, as Sandy said, I have not seen bundling innovation into contract delivering any value whatsoever. Right? So now coming to the question that you raised, David, if I look back, now 2 decades of my experience, and I look at the kinds of partnerships that I've seen that get formed, there are, I think, 3 levels of partnerships, right? So it's actually beyond skills. The first one I would say is actually around alliance, right? And those are really around moonshots, which is to really say, is there an opportunity to do joint research? And these would be with, as you can imagine, large technology partners who are venturing out, trying out new things to really say, as we change business models, as we look at kind of bringing in higher levels of synergies? Are there opportunities to kind of change the way things happen, right? And so you give a slightly longer duration to these alliances because those would actually take time. And some of them could actually fail too, right? So these are kind of pillars. If you get them right, it delivers significant value. If you get them wrong, it goes south pretty soon, right? Then a trend that's happening in the industry is historically, I think there's been a focus on saying best of breed. And so you end up with 10 different applications to perform a single business function and invariably struggle to get a business outcome, right? Now, the second kind of partnership frame that I look at is large platform players, right? Because what you see emerging over the last 5 years is players kind of moving into adjacent spaces. They are realizing that covering the end-to-end of a business process is actually important. And the realization that managing a best of breed to kind of moving to a platform is probably a better value. And I think so, therefore, the strategic technology partnerships around platforms, around value delivery, business outcomes is, I would say, the second kind of set of partnerships that are emerging. The third one is startups, right? Because you just can't imagine that there are white spaces, but there are startups working on it, right? And so that's the level of nimbleness that's coming in. You look around and you realize that every possible emerging technology has hundreds of startups and very well funded. And so there is that short sprint, try out newer things, kind of partnerships that are happening as well, which are almost like short sprints, try new ideas. If it doesn't work, move on. Right. So I would say 3 levels: alliances, strategic partnerships, startups, and quick experimentations. Right. So that's kind of how the investments are going, and then they are proportional, as you can imagine. Right? So.
Yep. So Soumya, thanks for that. And I think those are great points. I think, how do you think about different levels of partnership and what's the objective function and the North Star for some of this? I think that's really important. As we think about partnerships, one of the most important things that will exist in accelerating through this change is really going to be about talent. I think it's about time we started talking about talent and the ways we work and the way we build these organizations, from whether you call it the great resignation or quiet quitting. I think there's been a lot of analysis of what's happening with the talent economy over the last 2-3 years. So let's try and focus on that a little bit and see what we're seeing. So Sandy, maybe let me ask this to you. As we think about the talent and ways of working, and as we emerge from this great reset, let's say, and how does it change the way we think about talent, and how do you think about talent models as well, right? From how do we source, retain, grow, and how do you think some of that will evolve more broadly?
I think we've only got about 8 hours on this particular webinar. It's a massive topic, and I don't have answers. I don't think anyone has answers, but I have some points of views around what I've been experiencing, and it'd be great to have a conversation with my fellow panelists around this, and then get questions in. So I think ways of working, I think that's the key phrase for me. And it's an interesting, and I think it's a complex area. It's evolving, and I suppose the question is there a fundamental shift in our value proposition for talent? And I think the pandemic, by the way, I think there has to be, but that's the answer. But let me go through my kind of crazy logic. The pandemic absolutely made us all realize that the genie's out the bottle, right? That remote working at scale is possible. Now, some people say colleagues loved working at home. Other people say it was a complete psychological and mental health disaster. I would argue whether we truly got productivity out of the work from home experiment during the pandemic. But, generally people say we're never going back. We're never going back to the old ways. And I tend to agree with that. And I think that has to inform our talent models going forward. Directly, it has a direct impact on our talent models. Number one. Number two, there's a generational thing that keeps trotting around my head. And Nitish, you and I were joking earlier on, we've kind of gone through the baby boomers, Gen X like me, though I still maintain I'm a millennial. I'm not. I think the Gen Zs are behind us. the social media, tech savvy, Insta gratification or Instagram generation. And now I believe the term is Generation Alpha, which I think is sort of relevant till 2025 plus. Those born 2012 onwards are going to be known as apparently Generation Alpha. But I think for all of them, the thing I struggle with is we've dumbed down the work that we're asking our people to do. We really have. You know, we've taken graduates, for those in certain geographies around the world, we've taken degree junkies and we've asked them to do very basic work. And so I keep thinking the ways of working have evolved. Our talent models need to evolve.
Yeah.
We've got used to collaboration tools. We've got used to flexible working. We've got used to gig workers, 2-year maximum churn, that instant gratification. So I think we've got to really discuss here what we need to do to maintain talent. And I think it's two things. It's skills pathway and it's careers pathways.
Okay, can I take that from you, Sandy?
Yeah, please do.
I'll
Please
give
do.
you a break. I'm one of these, you said the baby boomers are gone. Well, there are still a few of us still in the,
Yeah,
still
I know, me too. We're hanging around.
I'm a proud baby boomer, but
Good.
when I went into the workforce, I won't tell you how many years ago, you all can guess, there was such a thing as the concept of a career. There was a concept of time and grade. There was a concept of career pathing. It wasn't necessarily explicit, but it was implicit. What we have done, and I absolutely agree with you, is done down the work so it's highly transactional. We transact with the people. I'm not talking about leaders, but with the people who do the work, we transact with them. We do not nurture them. We do not invest in their training. We don't even know how to train them and what to train them for because we don't have a good sense of the capabilities we need to future-proof not only a global services platform, but also an enterprise. But there's no sense of career. We hire someone to do a job. We don't hire someone to invest in them and to create a future beyond the immediate job that they're doing, and shame on us for doing that. I really believe this industry broadly has shot itself in the foot. And if you look particularly at offshore locations, we have made it even more transactional. There is, in an enterprise, there is some sense of a future, but I'm not sure that's true in a global services provider.
So I think, Deborah, just sort of, for me, multiple career pathways will only happen when we create multiple skills pathways and those learning opportunities. I think that's my take on what we need to do to deal with the talent conundrum. I think sourcing non-traditional ways and the traditional routes, the retention measures above that I've talked about, and also really thinking about how to rotate that talent genuinely in and out of the business is I think something certainly services organizations haven't cracked. And so that's what I would kind of summarize as being the priorities around sourcing models. Let's really think around how we develop the skills, how we develop their career pathways, and then hopefully this sourcing challenge of people job hopping from one provider to another, one organization to another, will start to abate. Don't know whether you expected that, Nitesh, or not, but slightly impassioned cry there.
So that was really interesting from my side, Nitish. I was just going to say, it's really interesting from my perspective, your perspective on that. So moving slightly on though, so we've talked about we've not provided career paths, etc. So how do organizations deliver value to their organization? So we're not developing the talent, or you're saying we're not developing the talent and we're making it very transactional. How are the organizations that you're working with delivering value to the organizations that you're dealing with? And maybe Soumya, give you the first chance at answering that.
Yeah, so to me, maybe add a little bit of color to what Deborah and Sandy said, because if you really look at the overall scope of work, right, almost look at it like a pyramid. So the most exciting digital transformation happens at the top. The bottom, which is actually the breadth, is the lights on, right? And that's just the nature of the business. I don't think we can change that. So what ends up happening is you have a very small set of people that are on the top, focused on the digital transformation work, right? But there's a much larger base at the bottom that would have to do, the lights on work. Now, what ends up happening in that case is, and I have a slightly, different view than what Deborah and Sandy said, is some of the organizations that you saw on the chart invest quite significantly in training. But the problem is, how will the people use the training, right? Because there are only so many jobs at the top, right? And so therefore, that's when they feel that I know I don't have an opportunity, can I look elsewhere, right? So now, having said that, let me look at the numbers that we got for digital transformation. And then there was a comment that why are the numbers on digital transformation higher? So my interpretation of that is the budgets are definitely going to be lower, right? There's going to be a significant prioritization, and I think, David, you made this remark, right, which is delivering business value. The prioritization of how the budget is going to be spent is going to have a very, very critical focus, right? Every single spend will be reviewed, every single spend will be analyzed, and the ones that have the most value will actually come forward, right? Having said that, I think one of the things when we say digital transformation is table stakes, we also need to realize that, maybe over a decade or 6-7 years back, when this notion of digital transformation came, there was a lot of excitement, right? But if you look at the last 7 years and say, did the investment and the excitement deliver the business outcomes that it was supposed to? The answer is actually clear no, right? It is not even close. And that is where I feel that over the last couple of years, the focus has been, if you look at even the organization, right? Everybody set up a completely different digital office. Now, if you look at how many organizations have digital office and technology office that's distinct, none, right? Or maybe handful. And that's because the realization has now come that it's not about creating these organizations, but it's about looking at where is my business headed, right? If I'm delivering a digital transformation, what is the change that needs to happen on the business side? Because getting a technology to work is the easiest thing, right? Exaggerating a little bit. But making your business change is the hardest thing to do. So unless you start with a harder problem to say, hey, what does this mean for the business? How is the business model going to change? Are we even set up to deliver and work in that new business model? And therefore, how does my digital transformation support? And I see that awareness increasing. And that's why I'm not surprised with that increase. The budget is going to reduce. But within that, the digital focus is probably going to be higher. And it's actually going to be tied to business outcomes with shorter time frames and, being merciless when you have to unplug and kill, right? That's probably the most important thing. Be merciless, kill if it's not going anywhere.
Yeah, I see your comment about the organization's training. They spend a lot of money. Well, it's very easy to spend a lot of money. The challenge is spending the money on the right things. One of the things I do in my portfolio is I do some search work, and I can tell you it is a very rare enterprise that wants to hire someone for a provider. Why? Because they do not believe they may have the process skills. They may know how to move X to Y. They may know how to program, but at the end of the day, you're spot on, Samia. It's about affecting business change. And I think that providers and enterprises alike need to look at the money they're spending on training and spend the money on the right capabilities. Being able to manage a stakeholder, being able to understand how a stakeholder goes through change, the challenges, the opportunities is something that is a rare training across the enterprise, but it's even rarer in service providers. And if you don't understand your customer very well, you're not going to be able to create value. Sandy, I know you have a view of that on that.
Yes, I think I agree with you. Look, what do you want me to say here? I kind of think. Now I'll be slightly contrary. I'm going to take a slightly different view here. I genuinely think that spending is going to be lower, and I genuinely believe that, and I think the skills required to execute the transformations that we are funded are going to be a lot sharper. I'm going to disagree with you, Soumya, here a little bit around that pyramid thing. Not that I disagree with the concept. I genuinely think we are overly simplifying the skills that we think people need. Let me just leave it there. I don't want to get into too contrary a conversation. I'm genuinely struggling here around what value means. The only value that matters ultimately is what the enterprise recognizes, and that's revenue and margin. Everything else we do, i.e. the end-to-end value for the business, that's the only thing that really matters. And I think everything we do and everything we think around, whether it's talent or delivering value or how we deliver value, has to be focused on that one real end measure outcome. And that's the outcome that matters for the business. And that's whether it's revenue or margin, it doesn't matter. Everything we do with people or with jobs or with skills has got to be focused on that, because I don't think anything else will matter.
Can I just ask a question that sort of ties this question and the previous one together, and what Soumya said as well? So when we talk about digital transformation, do you feel, we were talking about the fact that you haven't seen many that have been truly successful. Do you feel they've historically been driven by IT who want to do digital transformation, or are they driven by the business? Picking up on Soumya's point, which is if you don't get the business involved, they're never going to be a success, and they're the key and the hardest ones to resolve, because that's where the challenge is. In your experience, have they started in IT and been trying to push into the business, or have the business been pushing for the transformation?
So may I go first? Oh, sorry, Soumya, after you. No, go on, please.
No, go ahead, Sandy, go ahead.
Well, so I think it always used to be IT driven, but I do think over the last few years, I've seen much more business ownership on these things. And I think they only truly land and are truly successful if it's owned by the business and enabled by our colleagues in the IT organization, in the CIO's organization. And I think truly, if they're not driven by business, what's the end value that the business expects, then I think they're doomed to failure. We've got, there's enough examples, right, of goodness gracious, the operation was a massive success, but the patient died because no one used the outcome. And I think we all know many examples of that. Goodness knows here where I'm working at the moment, literally we've got every piece of software you can imagine under the planet. Why is the question? And we'll let someone else answer that one. But Soumya, sorry, I was going to say, I think it's much more business driven now than it ever was.
Yeah, Sandy, I'll kind of take it up a little bit of a notch, because having spent time on both sides, I truly feel that it has to be a collaboration for it to be successful, because I think both models have failed, right? Because IT or digital organization trying to do something, and Sandy, to your point, trying to push to say this is how business process should be. And even from the business perspective, I wouldn't say that everything that the business picks is actually right? Because there are certain core skills that each of the organization, the teams have, and there's a reason that both teams exist, right? And what's starting to happen now is that collaboration at the edge, right? Which is to really say, where do we shake our hands and how do we kind of build this out? Because what ends up happening a lot of times when business picks is also to say, what looks shiny on a laptop of someone that's demonstrating a capability to you doesn't work the same way in an enterprise, right? That's the reality. So the question really is that, how do you pick the right capability to go live, and how do you ensure that it's enterprise grade? And that's where I think, that handshake is extremely important. If it doesn't happen, it does not matter who leads. I think there's going to be less than 20% success.
So all about collaboration is what you're saying, Soumya?
Yes. And that's my personal view. I don't know if anybody else agrees, but that's my personal view.
No, I don't disagree. I just think there has to be a value to whatever tech we deploy, to whatever digital transformation journey we want to go on. And that value at the end of the day for the enterprise has to be, I only have two measures, right? Am I generating revenue? Am I increasing margin? I mean, there's others. There's talent, there's controls, there's compliance, there's capabilities, there's agility, there's resiliency. All of that kind of stuff is value as well. But ultimately, for our shareholders, it's about revenue and margin. And so
sorry, that I fully agree with, right? The end of the day, it's going to be how are you impacting the top line or how are you impacting the bottom line, right? But the question is, how do you measure that, right? Because it cannot be a consultant's view of how you measure, because otherwise every single project will have an ROI and a business case. But the question is, in reality, is it delivering it? And so to me, what's important, and the reason I kind of talk about the collaboration, and I talk about how do you kind of bring that to life, how do you make sure that the right talent, both internally and externally, exists, you're able to adopt it, is unless you do the whole 9 yards, I think how do you even measure whether it's impacting the top line or the bottom line, right? But I fully agree with you. There are only 2 measures at the end of the day for any enterprise to survive, right? Either it has to increase your revenue or increase your bottom line. Otherwise, it's wasted effort.
And Deborah, do you agree with that? You've been quiet. I just want to make sure that everyone gets a chance to have a say.
No, I agree with that. I think that we get lost in some of the metrics that we put up on the board, and we don't know how to measure them. And I'm being a little provocative here. I don't think anyone's ever cracked the value that a global services platform actually creates. I mean, there's so many different colors of the way we work, and we can be outsourced, we can be hybrid, we can be in-source. We know what the outcomes are, but we don't know how to measure the models, the opportunities to create that value. I don't think we're there yet. I think whomever is able to do that will be bloody brilliant.
Brilliant, thank you.
It's
So
a
moving on.
provocation.
Yeah. Yeah, and everyone's running around thinking, if I can do that, I'm going to be considered brilliant by Deborah. So they're going to try and work on that. We'll maybe revisit in a year, see if anyone's come up with any ideas. Just in the last sort of question that we wanted to ask before we sort of do a wrap up and then get into some of the audience questions is, and this is for all of you, but maybe if you just give us 1 or 2 sentences around advice that you would give to organizations that are listening, the one thing that they maybe should be thinking about doing in the next 3 to 6 months from your perspective. So maybe, Deborah, we'll start with you because you were speaking last. Maybe we'll start with you, then go to Sandy, and then finish with Soumya. But one piece of advice that you would give organizations over the next 3 to 6 months.
I think you need to be both nearsighted and farsighted. That's a picture to conjure with. You've got to see short term. You've got to be able to put it in context of long term. I've had conversations in the last couple of months about with services leaders on both sides of the blanket who are talking about more scope, more this, more that. We have a year in front of us that's not going to look like last year, which was very, very hard. We need to focus on the here and now, and with an eye to what it means for the future. And that's going to be exceptionally tricky. I don't think there's anything magic about next year, but a little bit of a myopic view is going to be exceptionally helpful.
Thank you. Sandy?
Okay, I'm going to give you a slightly different tack. So if the question is, how do you think the operating models need to evolve going forward? Everyone's looking at operating model, right? All of our consulting colleagues, the big 4, the strat houses, they're all in the enterprises. All the enterprises are re-looking at their operating model, right? We've got to be different. And I don't know what else to call it, but it's called the feel factor. That's what I call it. And I think, and maybe this kind of is going into the one piece of advice kind of area is, but I think for us, the fundamental capabilities and questions are all around the feel factor. Let me just explain that, David, and I'm going to hand over to Soumya. So I think whatever operating models we create or whatever capabilities we need going forward, they've all got to be focused around that basic human thing that we desire, and that's how you make me feel, how you make people feel, how you make all your stakeholders feel. Whether you're transforming or doing BAU, it doesn't matter. It's are we not all about giving people the experience that you and I get when we're in the hospitality industry, right? I think we're all in the hospitality industry in one way or the other. So it's all about really creating that human connection, a memory, a sense of belonging, a sense of true delight. And I think that's what I think the operating model needs to focus on going forward. Now, slightly different point of view to the one perhaps Deborah or Soumya might have. But I think all the work I'm doing at the moment, or have done recently around the operating model and the capabilities I need, are around in creating that trust. And that trust comes from that feel factor. And so I want us to be thinking the same way that you feel when you're enjoying something in a hospitality setting. I don't know how else to put it, but it's that, well, it's a different view. Deborah's probably looking at me going, the guy's been smoking something interesting. But I genuinely feel that the next curve, the next wave in front of us is about that feeling factor.
And
Sandy,
Sandy,
I'm going to trademark that, by the way.
Yeah, and to be clear, are you also talking about how you make the people within those processes and within the business feel? So it's not just because we do see a lot of talk around sort of employee experience, and there's a lot of coverage that we've done on that. So it's how the employees feel, but also then how their internal and external customers feel as well. It's
all stakeholders, my colleagues, my employees, my suppliers, my customers, the enterprise, all of those who care. It's the whole thing. I just call them stakeholders.
Yeah.
Why don't you just call it the kumbaya factor?
Well, you see, that's why you are where you are as a baby boomer. No, I mean, seriously, honestly, let's just think about it, right? It was some time ago. I think it was a TED talk that someone did. But it summed it up beautifully, right? If you go somewhere and you come away feeling like, you know, $1 million, you are always going to go back and you're always going to sing their praises. And I think we mystify transformation and digital transformation a bit too much. Let's just deliver stuff that delights people.
We should do a whole LinkedIn Live with Deborah and Sandy debating this, I think. But Soumya, it'd be good to get your view as well.
Yeah, so I'd probably be a little closer to where Deborah was, right? Because
yeah, I thought so.
I think what's going to be important is, it's obvious that the budgets are going to be low, right? But what's going to be important is the prioritization, because there is, while the aspect of short term is important, but I don't think you can come out of a back-to-back pandemic and recession being short-term focused, right? So you actually have to get ready for the long term, and that's going to mean different things for different industries, right? But I do feel that the prioritization and focusing on capabilities that can deliver value in the long term is going to be important. And so getting that view, putting that planning in, and having laser sharp focus on execution, that's, I think, important as well, that you have a very laser sharp focus on execution, get things done faster, get it done with the right set of partners, and kind of keep looking forward, right? So that would be my 2 cents on this.
Brilliant, thank you. And our focus area for 3 months' time is to get Sandy and Deborah to have a debate on the kumbaya factor, and we can tell pay-per-view tickets will be available via Sky Sports. No, Nitish, back to you.
Yeah, just when you thought, the telly couldn't be more exciting with the World Cup, I think this is really the next big outing. But everybody, thanks for that excellent discussion. We'll get to some Q&A now. I thought I'll do some summarization, but I don't think I need to do a terribly good job at it, because I think we can just call it the kumbaya factor and be done with it. I think that's really the summary of the discussion, and I think it's a good and a hopeful note to end on. But let's take some questions. We had a bunch of them pre-submitted. We see a few live as well. So let me take one live one, and then Soumya, I'll send this your way, because you literally have the word that this gentleman's asking about in your title, and which is the existential question around innovation. What does innovation really mean, and definitions of innovation? So I don't know if you have a view around that, but would love to hear more.
See, this is where I kind of jumped in when the question of contract and innovation came in, right? Because I've seen this on both sides of the table. Now, when we talk about innovation, we invariably start thinking about something big, right? While something big is important, I feel innovation is a continuum. right? And so what happens is when you put things into the contract, this is precisely where the problem starts. Because for the duration of the 3 or 5 years, I have never seen two parties agree on what the definition of the innovation is and what you should be measuring, right? So to me, starting from continuous improvement, which is just tinkering with the process, to incremental innovation, to breakthrough innovation, each one of them adds a value. I think we just need to be realistic about what fits in where, have the clear view of, what do you want to call it, and create 3 distinct work streams, right? Because one of the things is this whole innovation register, right? And so what ends up happening in a lot of these contractual things eventually is that people are trying to fill up the innovation register and show a value. But I think get away from that, right? Focus on actual value delivered. It could just be that you reduce 5 minutes, but that is continuous improvement. So to me, the short answer is there are going to be 3 at least distinct buckets, if not more. There's going to be a continuous improvement. It's going to change a process, change an approach, and then you deliver some, benefits in terms of efforts. There's incremental innovation, which is going to change the way you work, but it's not radical, but it still helps kind of move a certain sub-process away, delivers value. And again, having a focus on the business, because end of the day, all of this needs to have business value. Great RPA, great AI, good, right? What did it deliver to the business? There's nothing, nobody's clear, then there's a problem, right? Then you come to the radical innovation, which is like a new business model itself, right? And those will be rare and few, and that's fine, right? But have this continuum, take a very, independent view, keep moving on, right? Short sprints and look at the value delivered, right? So that would be my take on, how we can look at innovation.
Absolutely. And that's a very interesting perspective. Again, taking a nuanced view of the situation. We'll try and do one more question, maybe try and squeeze in 2 if we can. But Deborah, let me send this your way. And this was submitted to us before the panel discussion. And this is really around this age-old question around outsourcing, stroke, offshoring, nearshoring, right-shoring, whatever you might want to call it. Of late, I've been hearing, given the geopolitical nature of things, the term ally shoring or friend shoring coming in. But the person really wants to know, how do you think companies and large organizations will react in terms of what they outsource, what they retain during this period of economic uncertainty, and which area of business, for instance, will this happen more in versus others? So I know it's a broad question, but any perspectives on that?
It's a very broad question. I don't think we have enough time for this very broad question, but going back to my initial comment, I think outsourcing is here to stay. We will always look to supplant, augment, change through different pools of labor. As organizations become more adept with workforce planning, I think they will focus more on third-party sources of labor. The challenge, I'll go back to what I said earlier, the challenge is the contract. Unfortunately, providers don't want short-term contracts, and the enterprise doesn't want to be locked into a way of working which is going to change in a year or 2 years or 3 years. I think that's a conundrum. If you think about the outsourcing model, it hasn't changed. It hasn't changed since somebody traded dead rabbits for berries, going back to hunter-gatherer days. We still transact. What I would hope over the next couple of years is that we'll see a change in the sourcing model. I think that's where the growth will come, when we really can understand that the contract is the unfortunate, reality of a contract does not respond to changing business needs. If we can crack that, I don't know how to do it. I think you're going to see a more alignment and greater sourcing.
Absolutely. Makes sense. I think we have time for just one more, David. I know you have one in waiting, so why don't you go ahead?
Yeah, we just had one come in live, and maybe Sandy, get your view on this. But the question was around to bridge the talent gap that we've been talking about, but also building capabilities. Interested to understand your view on creating gig type work from an internal role. So creating gig roles from an internal perspective, so people don't have to wait for job rotations, but they could potentially work on a couple of different areas if they've got the skill set within a business. I know we've not touched on this, but just be interested in your view. Do you see future for like internal gig, I guess, would be a way of looking at it?
It's like the question's been planted. We're doing it, right? So my current organization today, it's exactly what we've been experimenting with for a while. I think it's really important, given the fact that I think the term Deborah used, and I think we agreed with, was, we've dumbed down certain types of activities. So what we're asking, certainly in my organization, is people to work in different areas on a rotational, I call it the skills travelator. So you're literally going from role to role, or sub-process to sub-process, or in some cases, task to task for short periods of time, and you're rotating continually. And what that's doing is it's doing two things. A, you're broadening your skills aperture, you're learning more quickly. It takes a bit of finessing, right? Because you're trying to move people around quite regularly. And we're talking about 4-week stints here. We're not talking about anything more. It's literally a 4-week, in you go, do something, learn something new, whether it's a skill or a capability or just you're getting a gig job for a period of time, and then you're going to the next one. So one, you're really upskilling people through their skills journey. Secondly, just think of the retention, right? The motivation and the people engagement you get when you're proactively creating that skills travelator. That's what we term it. Now, how do you scale that is the big challenge. How are we going to deal with that next generation of people who want instant gratification, not in 2 years, but in 6 months? What do we do with people who want to say, actually, I'd quite like to work, 10 to 11, and then I'm going to go to the gym, and then I'd quite like to work from 2 to 6, and then actually I'd quite like to work from 10 to midnight. That kind of gig solution, I haven't cracked. I'd love some advice on that, because people are asking for that extraordinary flexibility, and I don't know how to satisfy that itch. But certainly, if gig is put people through lots of different experiences quickly, love it. Already doing it, and more to come.
Great, thanks, Andy. And yeah, and we should definitely have a conversation about the broader gig conversation. I've looked into this in the past, so I'd be quite interested to have a conversation. So just as we're ending, we've only got a minute or so left. So just wanted to make an offer to the audience there. If you're in an enterprise organization, then we make an offer that if you want to sort of check out how Everest Group works, we can offer a complimentary price check where you can pick 1 of 3 roles from the functions across cloud or finance and accounting or IT applications, and also pick 3 countries from a set of 6 countries that you see on the screen, and we can do a complimentary price check, because we know one of the things that we talk a lot about is understanding where your pricing is going to put you in a very powerful position to be able to negotiate with your service providers or understand where you're going if you're getting asked for rate increases. So if you're an enterprise, this isn't open for service providers, but if you're an enterprise and you're interested, there is a link in the chat, and you can press on there and express your preference, and then someone will follow up with you. But that's really just a way of getting some access to some of the content that we at Everest Group produce. But I think, Nitish, I don't know if you want to wrap it up, or we just want to say thank you to everybody.
Yeah, absolutely. So everybody, including the people who dialed in, thanks for joining us today. I really want to thank Deborah, Sandy, Soumya, and David for the time today. I think it's been an interesting chat going into this. I thought about a lot of things, but I didn't really think about the fact that we'll talk about how we like the hospitality industry or the Kumbaya factor. So
come on, there's nothing else, something different.
Yeah, it is, yeah, and I absolutely agree. So I think, we promise it will not be boring and it will not be a bunch of slides, and hopefully we've lived up to that promise. So thanks everybody for dialing in, and feel free to reach out if you have any questions.